to the stock of the day though, because TPG Telecom has seen its share price rally after buying new licenses in the 3.7 gigahertz spectrum for $128 million. It has acquired the spectrum in metro and regional areas as part of an Australian Communications and Media Authority's auction. Now, the acquisition will be funded through TPG's existing debt facilities. So there you go, share price sitting at $4.73. Guys, I thought we would talk TPG because it's an interesting time in telcos in general, right? We've also got Telstra looking to add spectrum, and we've got Optus looking a bit shaky, let's say that. And then you've got the likes of some other sort of telcos, ABB and stuff, that are getting a lot of interest. So I'll start with you, Howard. Telcos, defensive, needed in a portfolio?
Not really. I mean, the trouble with telcos is everybody wants the cheapest possible broadband and mobile, so they don't want to pay much. There's lots of competition, so everybody's fighting to be cheaper, but they want brilliant service. Now, you can't at the same time provide brilliant service and be cheap. And that means that all of the companies are either going to end up making much less money than they would like to, not good for shareholders, or will end up with problems, like with Optus. When you have a part of the market like this, where there's so much competition and where the requirement from the customers is be cheap, it's not a good place to be putting your money.
Good point. Okay, so on the metrics though, TPG?
Well, when David Teo was running it, the metrics looked really good. It had very little debt, it had high return on equity, and the earnings were growing. Now it's got very low return on equity. It's been below 10% for the last 3 years, well below 10%. Earnings aren't really growing, and the debt's gone up, and now another 128 million, which they're going to fund out of debt facility, so debt's going to go up some more. So it hasn't been passing for 3 years for our Team Invest members, and it'll look worse now.
Okay, so that is a sell?
Oh, definitely from our point of view.
What do you think, Grady?
Exactly the same. So we're in a high cost environment and we're in a high interest rate environment. High cost environment means that customers are looking for the cheapest alternative, as you both said. And then a high interest rate environment means repaying debt is so expensive with every interest rate hike. The RBA just hiked again. All the banks passed it on, and the company actually had $3.97 billion in debt as of June 30 this year. They refinanced to $2 billion, but taking on more debt right now, like, what are you doing? So I understand they're trying to be competitive, but during the Optus outage and the cyber attacks that have been really plaguing in the space recently, TPG hasn't really been the beneficiary of switching. It's more Telstra is getting, Vodafone's getting Optus clients, and so TPG is not really on the forefront of many consumers in Australia. So for me, it's definitely an avoid, and their profit margin is also falling since the strong year of 2020. So just there's a lot of metrics there that I'm like, avoid.
Yeah, okay. I do note that we've got Bell Potter with a hold on Telstra.
Yes.
I don't know the view, actually, house view on ABB, or if you guys even cover it.
I don't know if we cover ABB.
I don't think you do. All right, so that is a sell for TPG. Wow, it's rare we get a double sell for the stock of the day, but there's a first for everything.
Yes.